Hello. Sir, am I audible?
Yes.
Sir, I'm saying that we should start off with the session because, we have to continue from yesterday's class and also we have to summarize what we studied yesterday and till the other participants are joining. Is that fine, sir?
Yes.
Okay,
So
great.
I have logged in from two IDs, ma'am. So can you please make a host?
Yeah, sure. Just let me check, please. Okay, sure. You are the co-host, sir.
Okay.
Great.
So, guys, first we will revisit what we did yesterday. So just give me a minute. Let me share the whiteboard. Okay, I hope now the whiteboard is visible to all of you. Right?
Yes, sir, it is visible.
So yesterday, first we have discussed the strategy called bear call spread. So as we have learned yesterday, when we have a bearish view, okay, then we can design this strategy. Okay, bear call spread. If you have a bearish view. So let's say, for example, Nifty is taking support at 17,000 rupees. The moment Nifty break 17,000 on downside, what we can do, we can go for bear call spread, because now the view is completely bearish because support is taken out. So this will be termed as breakdown candle. So how we can enter in this strategy, how to design. So first what we will do, we will sell call with lower strike, and at the same time I will buy, okay, call with higher strike. So here what I will do, I will sell 17,000 call and I will buy, let's say, 17,100 call. Now this 17,000 call is trading at 50 and 17,100 is trading at 10. As we have bought, we have to pay premium. As we have sold this, so we will receive 50. So this 50 is credit, 10 is debit. So on net basis, you can see we are having a net credit of 40 points. Maximum loss and maximum profit we also discussed. So we are a seller in this strategy. So as we have discussed in basics, seller cannot make more than what we have received. So maximum profit is net credit. And to calculate maximum loss, you need to apply a shortcut formula, strike spread minus net credit. So strike spread, you can see it is 100 points, and net credit, you can see it is 40 points. So 100 minus 40, 60 will be maximum profit. So maximum loss 40 points. Sorry, maximum profit is 40 points. Okay, maximum loss is 60 points. Now let's try to understand when this maximum loss will happen. If your view is incorrect, let's say after giving a breakdown, okay, and breakdown completely failed and Nifty again start moving up and it crossed 17,100, let's say. It crossed 17,100. Then maximum loss will happen, which will be 70 points. So this buy leg is actually giving you the protection. Okay, this is the protection for us. In case if our view is incorrect, then at least we will make some profit from 17,100 strike. At least I will make 10 points profit from 17,100 strike. And when this 40 points will be yours when your view is correct. On expiry day, let's say Nifty closed below 17,000. Then 40 points is yours. Now, next strategy we have discussed, which was bull put spread. Okay, so bull put spread. When we will design this strategy, we will design this strategy when we have a bullish view. So let's say Nifty is facing a resistance at 17,000. The moment resistance is taken out, we are bullish. We can go for bull put spread strategy. So what you can do, you are a bullish and you are using put option. So you will sell, okay, you will sell 17,000 put, and at the same time, okay, at the same time, let's say we are buying 16,900 put option. So we are selling higher strike. Okay, we are buying lower strike. Okay, this is 50, this is 10. Again, net debit, you can see, sorry, net credit is 40 points. So maximum profit 40 points, maximum loss same 60 points. Okay, any doubts, any queries? If you have, you can ask now. I hope this part is very clear. Now we will move to practical example. If you have any queries, you can ask. Yeah.
Any confusion to anybody in this concept? You can type it in the chat box so that we know. There's a question that in both these spreads, we have to use ATM and OTM only, right?
Yes. Yes, correct.
Okay, I guess there are no more questions apart from this, so we can move forward. Yeah.
Okay. Okay, now we will quickly check, let's say HCL Technologies. Okay, so this is the graph of HCL Technologies. This is daily time frame. So whenever you wish to trade, stocks and you want to design strategies, always use daily time frame. Okay, this we have already discussed while discussing bull call spread. So we are revisiting this graph. Okay, this was the resistance breakout. Okay, we have discussed this. Now, as resistance is taken out, guys, either we can go for bull call spread or we can go for bull put spread. Okay, this is the breakout. Now, my view is bullish. I am expecting price will move higher. So I have two choices now. Either I can go for bull call spread, I can go for bull put spread. Either I can use call options to design strategy or I can use put option. So if I'm using call option, the name of strategy will be bull call. If I'm using put options, so the name of strategy will be bull put spread. So now let me show you how we can design bull put spread. Okay, we got this breakout on 21st December. So I will take you to the option chain. And we will quickly select the strike prices. Okay, which strike price we can select. Okay, we will quickly check the closing price. So on 21st, you can see HCL Technology closed at 1205. And let's say we want to design bull put spread. So you need to focus on right side. Okay, right side, we have put option data. On the right side of this table, okay, this is put option data. And this is the option chain for 21st December. So which strike price we will select? Guys, quickly type in chat box. If you wish to design bull put spread, which strike price you will select? Okay, you can mention which we will sell, which we will buy. Okay, both you can mention which strike we will sell, which strike we will buy. Okay, bull put spread. We want to design bull put spread. HCL Technology closing price is 1205. Okay, closing price is 1205. Okay, great. So we will sell 1210 and we will buy 1200 strike price. Okay, sell 1210, buy 1200. Now, can you see 1210 strike was trading at 19 rupees at that time, 19 rupees, somewhere close to 90. 1200 strike price was trading at 13 rupees. So how much is the maximum credit? Okay, so now also type break even point, maximum loss, maximum profit. Okay, all three things you can type in chat box. I want BP break even point, maximum loss, maximum profit. We are selling 1210, we are buying 1200. Okay, Lakshmi answer, you can calculate once again. Okay, I want proper break even point. We are selling 1210, we are buying 1200. So calculate break even point, maximum loss, and maximum profit. Okay, net credit 6.5, fine, 6.5 is net credit. So what will be the maximum profit in this case? Okay, net credit is 6.5. So maximum profit will be how much? Maximum profit will be how much?
Heavy bit. So most of them are saying 3.5 or BP is 120, 3.5.
Perfect. Okay, 1210 minus 6.5. Okay, 1203 3.5 will be break even point. Maximum profit will be 6.5. Okay, 6.5 can be your maximum profit. And what will be the maximum loss in worst case scenario? How much will be the loss? Ten minus 6.5. Okay, 10 minus 6.5. Strike spread is 10 points minus 6.5. Okay, 3.5 will be your maximum loss. Now, when maximum loss can happen? On expiry, if HCL Tech closed below 1200. On expiry day, if HCL technology is closing below 1200, then 3.5 you will lose maximum. If it closed above 1210, then 6.5 you will make. Okay, 6.5 you will make. Now look at the closing price. Latest closing price. Can you see on top? It is 1265. Okay, it is 1265. So very high chances this is likely to give, close above 1210. As of now, this is looking like it is going to give close about 1210. So 6.5 we could have made from this strategy. Okay, lot size is 700. So you can multiply with lot size, you will get the total profit. Now let me quickly show you margin requirement. How to check margin requirement. Okay, we will create a basket and we will quickly check how much is margin requirement. Okay, so first what you need to do, you need to first buy 1210 call option. Okay, first we will buy 1210, sorry, put option. Okay, we are going for bull put split. So first you will buy 1210 put option. Okay, and then you will sell 1200 put option. Okay, so this much margin is showing as of now, 31,400. This is as of today. So it might be different on 21st, but there won't be any major difference. Okay, it will be somewhere close to 35,000 or maybe, maximum till 40,000. Because this margin, keeps on changing on daily basis. So as of today, you can see if you are going for this strategy, this is showing this much margin. So this is how you can quickly check. First, you need to buy and then you need to sell. Then only you will get margin benefit.
Okay, sir. Any confusion in this concept? Anybody who's having any question or any query? Is it bull put spread, right? Sir, Lakshmikant sir. Manisha, am I audible to you?
Yes.
Sir, Lakshmikant sir has a question. It is bull put spread, right?
Yes, bull put spread.
Okay.
Okay, bull put spread. So let me see if I have done any mistake while calculating margin. Okay, so this will be, oops. Okay, 12.10 we have to sell. Okay, so this much margin is showing as of 37,000. Okay, now it is proper. Okay, sell 12.10 and buy, we are buying 1200. Okay, Crompton grapes, we have seen this. If you remember, there was a support breakdown. Okay, so at that time we have discussed we can go for bear put spread. Okay, bear put spread. We are bearish and we were designing strategy using put option. Now, what other option we have? Still we are bearish, but we can also use call option to design strategy. So we can go for bear call spread also on this day. Okay, now I will open the option chain and you guys will tell me which strikes we should select. Okay, support breakdown happened on 2nd December. 433.70 is closing price. 433.70 is the closing price. Okay, now select guys strike prices. Okay, which strike price we will sell, which we will buy. 433.70 is closing price. Okay, here is the option chain. Which strike we will sell, which we will buy. ATM we will sell. Okay, out the money we will buy. ATM sell, OTM buy. 433.70 is closing price. So 430 will be OTM. Okay, 430 will be OTM. 430 will be at the money. And you can buy 420. Sell at the money, buy out the money. Sell at the money, buy out the money. Vicky sir, you can do calculation once again. Shailesh sir, you can do calculation once again. Sell at the money, buy out the money. 433 is closing price. 433 closing price, sell at the money, buy out the money. Okay, we will sell 430 and we will buy 420.
Sir, Vicky sir is asking, this is for bear put spread, right?
This is for bear call.
Yes,
Okay,
sir.
we are discussing today's strategy from seller point of view.
Okay,
Bear call spread.
fine. Vicky, sir, is it clear for you now? Great, great. Okay. Sir, there's again a question from Lakshmikant, sir. Sir, as per rules, sell with lower strike and buy with higher strike, right?
Yes, 4:30 we will sell. Okay, you need to focus on call side data. Okay, you need to focus on call side. We are discussing bear call spread right now. So you can open the notebook and you can quickly check what you have written over there. We are discussing bear call spread. Bear call spread means I'm bearish. I'm expecting now this counter is going to trade below 430. Okay, this is likely to trade below 430. And this is call side data. Okay, 430 we will sell, 440 we will buy. At the money we will sell, out the money we will buy. Now here you can see this option is bit illiquid. When we are going for bear call spread, you can see the difference. So this is illiquid contract. So all options contract are not liquid. So you need to be very careful. So if you cannot design bear call spread because option is illiquid, you can go for bear put spread in that case. Okay, if you cannot design strategy from seller point of view, then design strategy from buyer point of view. So all contracts are not that liquid when it comes to options.
Any questions, anybody? Okay, sir, we don't have any questions for now.
Okay. So guys, we have completed all spread strategies. Okay, bull call spread, bear call spread, bear put spread, and bull put spread. Now what we will do, we will try to understand option chain. And I will show you now how you guys can sell option. Okay, how to sell naked option to earn, let's say 2 to 3% return every month on your capital. Okay, so that strategy we will discuss. How we can sell naked option to earn 2 to 3% return. Now, very first step, guys, what you need to do, you need to find out list of stocks. Okay, you need to prepare a list of stocks, which are weak stocks and which are strong stocks. Okay, you need to prepare one list of a weak stocks and list of a strong stocks. Now, before I show you how we can create this list, we will try to understand option chain, and we will also try to understand concept of open interest. Now you can see this is the website. Okay, icharts.in. Now this is the paid website. This is not free. So I will show you here, how you can check open interest and everything. So once you log in here, okay, this is the home page of this website. And very first thing you will get the snapshot. Okay, this is known as market snapshot. Here you can see long built up, short covering, short built up, long unwinding. Okay, price gainers, price losers. So we will try to understand each and everything here. Now here you can see we have a option. When you click here on down arrow, you will get so many options here. We need to select options chain. Okay, once you select option chain, by default, you will get option chain of Nifty. Here you can see. Okay, symbol is Nifty and expiry date you can see 30th December. So by default, you will get index option chain. Okay, this is the option chain table. On left side, we have a data for call option. On right side, we have a data for put option. Now in this entire table, okay, two columns are very important. Okay, here you can see we have a column of OI. So you can read OI as open interest. And here you can see we have a column of OI change. So you can read this as change in open interest. Okay, same is the case with put option. So this is OI for put option, open interest, and this is change in open interest for put option. Now first let's try to understand what open interest basically means. See, open interest means contracts which are not yet closed. Okay, contracts which are still open. So the name is open interest. One long contract plus one short contract. Okay, it makes one open interest. One long contract plus one short contract is equals to one open interest. So let's say I am a bullish on Nifty. So I am buying, let's say 17,000 call option. How I will buy? Because there is someone who is selling me. So that guy is bearish. He is expecting Nifty will fall below 17,000. So he's selling to me and I'm bullish. That's why I'm buying 17,000 call option. So one long contract as I've bought. So I will be in long side. And one short contract, the guy who have sold me, he is on short side. So one long contract plus one short contract makes one open interest. Now till the time I'm not doing square off, I'm not squaring off my contract. Okay, my position will be termed as open position, and it will be reflected under OI, open interest. Now we need to look this table from option seller point of view, because option seller takes very high risk. As we have discussed in basics, seller has unlimited losses and limited profit. So seller is taking actually very high risk, buyer risk is very limited. So therefore we will respect this option chain data table from seller point of view, okay, not from buyer point of view. In open interest, as I told you, one long contract plus one short contract makes one open interest. But still we will respect this table from seller point of view. We will read this entire option chain table from seller point of view, because seller is taking very high risk, compared to buyer. So generally it is said that, who sell option, there are, big institutes, smart money sell option, like, banks, FIs, they prefer to sell option. So therefore we will respect this entire option chain table from seller point of view. We will read this table from seller point of view, from writer point of view. Okay, this is for Nifty. Let's check what is the current market price. Okay, where Nifty closed. Okay, this is on daily time frame. So just I'm checking the closing price. So on Friday, Nifty closed at 17,003.75. Let's take it 17,000. It closed at 17,000. Just a minute. Okay. Now focus on call side and focus on OI data. Can you tell me in which strike price we have a highest OI? Just a minute. Just wait. Let me arrange this. Yeah. Now read this table properly. On call side, focus on this column, OI. Can you tell me which strike price is having highest OI? Which strike price is having highest OI? 17,500. Okay, here you can see it is highlighted. Can you read this number? 59,800,000 shares are open. How many shares are open or how many shares are active? You can read this number, 59,800,000. Okay, so these many shares are open in Nifty. When you divide this number with 50, because Nifty lot size is 50, right? When you divide this number with lot size, okay, you will get answer in terms of contract. These many contracts are open. These many contracts are active at 17,500 strike. Okay, these are in number of shares. When you divide with lot size, you will get answer in terms of contract. So 59,800,000 shares are open, 59,800,000 shares are active at 17,500 strike price. Now remember this point, strike price with highest OI, okay, on call side. Okay, you can write somewhere if you wish. On call side, strike price with highest OI work like resistance. Okay, it can work like resistance. So in future, okay, 17,500 can work like resistance. As I told you, we will read this entire table from seller point of view. So I can see, maximum call writing has happened at 17,500. Maximum call writing is taken place at 17,500. This means what traders are betting? Traders are betting that Nifty will not cross 17,500 till 30th December. Right? This is 30th December expiry data. So traders are expecting Nifty to trade below 17,500 level. That's why you can see we have a maximum call writing at this strike. So this strike price can work like resistance, and very high chances Nifty may close below 17,500 on 30th December. Now this is the dynamic data. Okay, it keeps on changing on daily basis. So I will also show you when to read this table. Okay, I will also explain you when to read this table. As of now, we are just understanding the important terms. So as of today, by looking at this data, I can say 17,500 can work like resistance because we have a highest OI at 17,500 strike price. Now we will move to put option. Can you tell me in which strike price you can see we are having highest OI? Okay, you can read this table properly and tell me in which strike price you can find highest OI. $16,500. 16,500 is having highest OI. So put writing has happened at 16,500. This means traders are expecting Nifty to close above 16,500. So strike price with highest OI on put side can work like support. Strike price with highest OI from put side can work like support, because major put writing I can see at 16,500 strike. So put writing is going on. So this is positive thing, 16,500. Right now Nifty is at 17,000. So traders are expecting 16,500 support, 17,500 resistance. So we got the range. So Nifty is likely to trade between 16,500 to 17,500. Okay, this is the range I can see as of now by reading this option chain data. Put writers are bullish. That's why they are selling put option. Put buyers are bearish. So we are reading this table from seller point of view. Put sellers are selling 16,500 strike price. This means they are expecting Nifty to trade above 16,500 level only. Put buyers are bearish, put sellers are bullish. Yes, OI, we read OI just to check where writing is going on call side and on put side. Any confusion, any doubt guys in this, how to read this table? So two things very important, what we have learned from this table. On call side, strike with highest OI can work like resistance. On put side, strike with highest OI can work like support. Okay, any doubt, any confusion you have, you can type in chat box.
Okay. So,
yeah.
Okay, it is clear. Patil sir says it says clear. So, any question from anybody else, or is it clear to everybody? Give a thumbs up, or you can ask your questions.
Yes, you can also use in NSE. Okay, you can also check in NSE.
Okay. So Nagraj sir is saying that repeat once.
So you can write down Nagraj sir somewhere. Strike price with highest OI from call side is resistance. Strike price with highest OI on put side is support. Maximum call writing we can see at 17,500 strike price. So call writers are bearish. Okay, that's why they are selling 17,500 strike. Put writers are bullish. So they are selling 16,500 strike. This means we can expect Nifty likely to trade above 16,500 but below 17,500, because at 17,500 we have call writers who are bearish. At 16,500 level we have a put writers who are bullish. Now next important column is change in OI. Okay, change in OI. Now change in OI means new business. Okay, change in OI means new business. As you can see now, this is as of Friday. Okay, this option chain data is as of last trading session, which was Friday. So at 17,500, if you see, the total OI is 59 lakh. But out of 59 lakh, can you see 20 lakh shares are added on Friday itself? Out of 59 lakh, 20 lakh shares are added on Friday itself. Means these are the new writers who have taken position on Friday. So before these new writers, here the number could have been 39 because 20 lakhs, came on Friday only. So new call writing happened on Friday. Now again, if you observe this change in OI column very properly, very carefully, you will find 17,200 major call writing happen in this strike, 17,200. See how many shares are added on Friday. 23 lakh shares are added. Means especially on Friday, okay, call writers sold 17,200 strike price. In the same way, you can check now on put side, change in OI. Highest change in OI I can see in 16,500. Fresh put writing happened on Friday in 16,500 strike price. 11 lakh 61,950 new shares are added. Means till Thursday, this number could have been 47 lakh because 11 lakhs are added on Friday itself. So 47 plus 11, okay, total became 58. So if I talk about only Friday, major or fresh, I will say fresh put writing happened in 16,500 and fresh call writing happened in 17,200, followed by 17,500. Okay, 17,200 followed by 17,500. You can see the numbers are more than 20 in both strikes. Okay, this is 23 lakhs 44,000. This is 20 lakhs 17,000. So this change in OI column is also very important. Now, when to read this table? As I told you, this is dynamic data. It keeps on changing on daily basis. So if you wish to, track index weekly expiry, right? Index have weekly expiry. So you can open calendar and you can always track this data on Wednesday and Friday. That is one day before expiry and on the day of expiry. For index, you can track this data on Wednesday and Thursday, one day before expiry and on the day of expiry. What you will conclude from this data? You will come to know where major put writing, call writing is going on, and you can actually, come up with the range. So as we have seen just now, the range we got is 16,500 to 17,000, right? 16,500 to 17,500. So this is the range we got today. The range is quite big because we have, entire 1 week in expiry. So you need to track this data for index every Wednesday and every Friday. Stocks have monthly expiry. So for stocks, what you can do, you can leave, 8 to 10 trading sessions. First 8 to 10 trading sessions you can leave. And maybe from third week onwards, you can check data for stocks as well. Because stocks have monthly expiry. So when new month begin, time value is very high. So you will not get time decay benefit at the beginning of month. So you need to wait for at least, I will say, 8 to 10 trading sessions. Wait for 8 to 10 trading sessions, and then you can start uh, tracking data for stocks option also. So in 1 month, we have approx 4 weeks. So what you can do, you can leave first 2 weeks, and maybe from starting of third week, what you can do, you can start tracking data for stocks as well. At Wednesday and Thursday, you have to continuous monitor the data. Okay, as this is dynamic data, so you have to monitor this data throughout the trading session. So you will get the idea where major call writing and put writing is going on. And change in OI is very important. Okay, you need to pay more focus on change in OI. Every Wednesday, every Thursday, you need to pay focus on change in OI, because that will tell you, where fresh writing is going on, in which strike price fresh business is coming. So more than OI, I will say change in OI is very important for every Wednesday and Thursday. For stock option, you can leave first 2 weeks. Okay, you can start tracking from third week onwards. Okay, from third week onwards, you can start tracking.
Okay, sir. So Vicky sir is
Yeah.
saying, please repeat the days for stocks option. Okay,
Yes,
you
yes,
have
done.
answered that question already. Fine, great. Any more questions? When we will take the position on this OI and OI change?
Yes, we will discuss that. Okay, right now we are just focusing on the terms, important terms. When to take position, how to take, we will discuss in detail. Okay, now
Okay,
I
sir.
will come to the home page, and we will discuss few important terms from home page. Okay, one term you can see we have a long build-up, and one term here you can see we have a short build-up. So let's try to understand what is long build-up and short build-up. Okay, these two are very important for us. You have to avoid short covering and long unwinding. These are not important for us. What important for us is long build-up and short build-up. Now, what is long build-up? In simple language, long build-up means long positions. Traders are creating long positions. So two stocks you can see on screen, FSL, emphasis. So on Friday, traders have created long position in FSL and emphasis. So these two stocks are bullish. Okay, as per derivatives data. Okay, this is called as OI data. As per derivatives data, two stocks are highly bullish, FSL and emphasis. Short build-up means traders have created fresh short position. Traders have created fresh short position. That's why these three stocks are coming under short build-up. So one is Voltas, MFSL, and Power Grid. Okay, so long build-up means buying is going on. Short build-up means fresh short positions are going on. Now, when long build-up will happen, let's try to understand in detail. See, whenever you find stock price is moving up, can you see FSL is also showing in long build-up? It is also showing in price gainer. It is showing on both the sides. So when price of a stock will increase, okay, when price of a stock will increase along with open interest, along with open interest, if price and OI, if price and open interest, okay, both are increasing, then we can say long build-up. If price, here you can see Voltas, I can see in both short build-up as well as in price loser. Do we have Voltas? No, we do not have Voltas. So when short build-up will happen, when price is moving down, okay, when price is going down and open interest is going up, okay, then only we can say short build-up is going on. Short build-up is going on. Okay, once again, when long build-up will happen, when price and OI, okay, both will increase. Then I will say long build up is going on. When short build up will happen, price is going down, but OI is moving up. Price is going down. Okay, price is falling. That's why, traders are bearish. Price is going down, but OI is increasing. Why OI is increasing? Because traders are opening new short position. Traders are building new short position. That's why this stock Voltas is showing in short buildup. Now percentage is also very important. Okay, for long buildup and for price increase. Okay, percentage is also very important. So minimum I want 10%. Okay, 10% rise in OI. If you see any stock in long buildup, here minimum we want 10% or more than 10%. Can you see emphasis is below 10%? So you can ignore emphasis. We will not focus on emphasis. We will focus only on FSL. Okay, it should be minimum 10% or above. Same is the case in short buildup. Here I want percentage minimum 10% or more than 10%. Then only I will say, yes, major activity is going on in these counters. If it is below 10%, you can avoid. No need to look at those counters. So what you can do on daily basis, you can open this web page and you will get the list of long buildup and short buildup. In which stock traders are creating long position and in which stock traders are creating short position. So this is like, scanner for us. We will get the list of stocks from snapshot, from long buildup and short buildup. Once I pick stock from long buildup, I will do the graph analysis. Okay, the very first step, what we will do, we will pick the stock. We will check which are the stocks inside long buildup, which are the stocks inside short buildup. Once you got the list, what you can do, you can open graph of that stock. So let's say, for example, I will open a graph of FSL because FSL is looking bullish from derivative data. I will cross check if it is looking bullish from graph analysis also. Then further we can do analysis. Okay, further we can do deep analysis and then we can think of creating strategies. So can you see FSL is looking bullish on graph? Do you find this? It is bullish by looking at graph analysis? Yes, no? By looking at graph analysis, can you say FSL is bullish? Yes or no?
Vicky sir says yes. Okay. Okay. Nagraj sir says yes. Atal sir says yes. Okay.
Okay, so you can see now we can cross check in this way. So first we will pick the stock from by doing data analysis. Okay, this is called as data analysis. What we did, we quickly check in which stock we have a long buildup and in which stock we have a short buildup. And then open the graph and cross check why major action is happening in FSL. Why this counter is showing in long buildup? Because here what price has done, price has broke the resistance. That's why traders are bullish and they are creating long position in this counter. Now this is the resistance breakout case. So here what you can do, you can design bull call spread. Okay, you can design bull put spread, bull call or bull put spread, because the view is bullish now on this counter. Okay, so either you can go for bull call or bull put. Now remember, when you are going for bull call, we want momentum. If price turns sideways, okay, you will not make anything. And we are in the last week of expiry, right? We have only how many trading sessions left? We have only 4 trading sessions left. 4. Thursday we have expiry, right? 30th December. So in last 8 to 10 days of trading sessions, okay, I will advise you always design strategy from seller point of view. Do not design strategy from buyer point of view. Why? Because time decay will be very fast. You have only 7 to 8 trading sessions in your hand. And if you do not get momentum in 7 to 8 trading sessions, and if you have designed, strategy from buyer point of view, you will not make any profit. So in last 7 to 8 trading sessions, always go for strategy from seller point of view. You will get theta decay benefit. Okay, you will get theta decay benefit. So here what I will advise you, you can go for bull put spread. Okay, instead of bull call spread, go for bull put spread. So in this way, you can find out which are the stocks which are looking weak and which stocks are looking strong. In this way, you can find out. Okay, any doubt, guys? Till now, you can ask in chat box.
Yes, please post your queries in the chat box and we'll be taking it one by one. Okay, it's clear. It says clear. Okay, Sushma ma'am says, IU change. Explain
Okay,
again.
it's OI change in open interest. So change in open interest is like, where fresh writing is going on. That is called as change in open interest. Where fresh call writing and put writing is going on, that is called as change in OI change. So in this example, you can see 500 is the strike price where fresh position have added on call side. On call side, 500 strike price. Can you see 16,500 is change in OI. So these are the new contracts which are added on that day. That's why you can see on this side change in OI. And total is now 50 to 800. Okay, including this. Okay, this total will include this 16,500. So including this change in OI, total OI you can read 52,800. Now, can you see 500 is a round off number, psychological level? So wherever you see round off number, okay, wherever you see a round off number, in that round off number, you will get highest OI. Okay, that's why, these round off numbers work like support and resistance in any stock. Because round off numbers are easy to remember. So traders create heavy position in those numbers. So we have 500. In the same way, it can be 1000 also. The number can be 800 also. So remember, round off numbers are very important, round off numbers. So there you will get highest OI. How to design bull put spread? Okay, you guys only have to answer this. How we will design bull put spread in FSL? Okay, so select these strike prices. Tell me which strike price we will sell. See, resistance level was 177. Can you see we got a breakout from 177? Now, what is our view? Our view is FSL is likely to trade above 177. We are expecting this likely to trade above 177. And closing price, you can check closing price is 183.45. Okay, 183.45. So what we will do, we will go to option chain, and here I will show you the OI table of FSL. Okay, when we got this breakout Friday, we got this breakout on Friday. Okay, here you can see this is the OI table, and look at the difference in strike price. Can you see we have a 5 points difference in every strike price? Closing price is 183.45. Okay, closing price is 183.45. Now tell me which strike price you will select. Okay, design bull put spread. Let's see if you can select right strike prices. Okay, design bull put spread. We will sell ATM, we will buy OTM. Okay, we will sell ATM, we will buy OTM. Hiren sir, your strikes are wrong. Okay, you can do the calculation once again. So if you are selling 185 strike, how much you will receive? You will receive 5.5. Now, what is the view? When we are selling 185 strike, what is the view, guys? Okay, tell me your view. Focus on 1 lakh. Okay, this is called as 2 lakhs. We are selling 185, we are buying 180. Okay, so we have a 2 lakhs. Meanwhile, focus on 1 lakh. We are selling 185 and we are receiving 5.50. So what is the view? Why you are selling 185? Okay, type in chat box. Why we are selling 185 put option? If you are selling 185 put option, what is your view? Correct. Your view is bullish. You are expecting it will close above 185, right? You are expecting it will close above 185. But let's say tomorrow, if this breakout turn fail, right? There are chances, because in technical analysis, we always deal with probability. So very high chances tomorrow, this breakout can turn fail. Let's say price came down, then what will happen? Then 180 strike will protect you. Okay, then 180 strike will give you the protection. So you are selling 185. Okay, you will receive 5.5. But on the other side, you are buying 180. So how much you will pay? You will pay 3.35. So on net basis, what is your net credit? Okay, calculate net credit. What will be your net credit in this? You will receive 5.5. You will pay 3.35. What will be the net credit? 2.15 will be your net credit. What is your maximum profit in this strategy? Okay, what is the maximum profit in this strategy? 2.15 is net credit. 2.15 is our maximum profit. Okay, we cannot make more than net credit because we are seller in this strategy, right? Now you can check the lot size. What is the lot size of FSL? 2600 is the lot size. Okay, 2600 into 2.15. If FSL actually close above 185, this much you will make. 2600 into 2.15. This will be your profit. But let's say if breakout turn fail and it closed below 180, then how much we will lose? Calculate maximum loss. Okay, calculate maximum loss. What will be the maximum loss? Okay, 2.85. That will be your loss. 2.85 into 2600. What is break even point? Calculate break even point. Okay, calculate break even point. 185 minus net credit. Okay, how to calculate break even point? You are selling 185 as you are bullish. You are selling 185 put. So 185 minus net credit, 182.85. If it goes below this level, okay, if it goes below this level 182.85, then your loss will start. Okay, then your loss will start. And in worst case, your loss will be 2.85. Now let's check what is the margin requirement. Okay, let's quickly check margin requirement. Okay, so we are selling FSL 185 put option. Now, can you see if I'm only selling 185, how much margin it is asking? 1,34. But I will protect this position, right? I will also buy FSL 180 put option. I will buy this. Now, as I protected my position, you can see how much margin it is asking. Okay, it is asking for 24,000. So 24,000 you need, and you can go for this strategy. Okay, either you will make 2.15 if this breakout is successful breakout. If it closed above 185, you will make 2.15. And if it came down, went below 180, okay, if it goes below 180, then 2.85 you will lose in this strategy. Okay, so guys, any doubt in this you can ask. I hope now this is clear. So you can also get stocks from these scanners. Okay, this is like scanner for me. I pick stocks from long build up and short build up, and then I confirm by doing graph analysis. If it is inside long build up, I will look for uh, if breakout is going on, if price is trading above moving average. All price action I check once I've found any stock under long build up or short build up.
Hello, sir.
Yeah.
Prabha ma'am has a question that can we predict will it go up or down?
Yes, we have predicted, right? So guys, you only tell me what we have predicted. Is it going to go up or it is going to fall? What we have concluded. We have designed strategy based on view only, based on our prediction only. We have designed strategy, right? So this is bullish. So we are predicting it can go up because I can see this is a resistance breakout. Okay, so here you can see same level was support. We got breakdown, same level turn resistance, and we got breakout. Look at last two candles. Can you see we have a big bullish candles? So clearly it is showing it is bullish. Okay, very high chances it can move up from here. Yes, Lakshmi Chan, if you see, if you are comfortable in taking risk of 2.85 into 2600, you can design this strategy. So we have discussed everything, how much maximum profit you can make, how much maximum loss you can make. So if you are comfortable, okay, assume, let's say this trade goes wrong. If that much loss will happen, if it is okay to you, you can go for this strategy. Not a problem. Yes. So in long build up, you will have a put writers. In short build up, you will have a call writers. So long build up is bullish and short build up is bearish. Okay, now once again, what we will do, we will visit the FSL option chain. Okay, we will visit FSL option chain. Can you see this is FSL option chain? Okay, this is bullish, right? This stock is right now looking bullish because of resistance breakout. If stock is looking bullish, okay, focus on put side. Now tell me the strike price in which you find highest OI. In which strike price you can see highest OI? In which strike price you can see highest OI?
So 190, 170, 170. Okay, Lakshmikant sir said 190, Patel sir said 170, and Nagraj sir also said 170.
Right, we can clearly see 170. It is highlighted 8,52,800. 8,52,800 shares are active. Okay, so 170 will work like support or resistance. Tell me. On put side, 170 strike price is having highest OI. So will it work like support or will it work like resistance? Right, it will work like support. Put writing has happened at 170. Now look at the OI. Tell me on Friday in which strike price you can see highest change in OI. In which strike price you can see highest change in OI? 175, right? 4,83,600. These are the new shares which are written. Okay, these are the new writers which came on Friday in 175 strike. So these guys are aggressive. Now here you can see 180. These guys are more aggressive. 3,14,600. So these many new shares came on Friday in 180 strike. And these guys are betting it will close above 180. So they are aggressive writers. They are selling 180 strike price. Then 170. Okay, followed by then we have 170, 3,43,200. So in all three strikes, you can see what has happened on Friday. In 170, 175, 180, in all these three strike prices, put writing has happened because of resistance breakout. Now let's move to call side. Now find out the strike price in which you can see highest OI. In which strike you can see highest OI on put side. Right? Very simple. Just you need to check where we have a highest OI. 190, 13,52,000. See. So this can work like resistance. Okay, this can work like resistance. Change in OI, if you focus on change in OI, where major call writing happened on Friday, 190, 185, 190, 185. Okay, 66 lakh. Can you see we have a negative number here? In which strike we have a negative number? 180 strike. We have a negative number, minus 10 lakh 50,400. So this is called as unwinding. Okay, here traders are closing this position because this is loss making position now. Earlier, traders have sold 180 call with the hope that this counter will trade below 180. But on Friday, it crossed 180 on upside. It closed at 183. So these many traders have booked losses. So they close their position. Wherever you see any negative number, okay, this is called as unwinding. Traders are closing position. They are booking loss. They are closing their position. And where new position is created in 185 strike, in 190 strike. Now only 4 days are left, right? In expiry, we have only 4 trading sessions. Right now, you can see this 190 strike is having a premium of 2.75. If FSL did not cross 190, then this entire premium will go to 0. Okay, if this counter did not cross 190 by 30th December, this entire premium will turn 0 because this is the time value. Okay, this is out the money strike 190. Right now, the current market price is 183. So 190 is out the money. 190 strike is OTM. And we are paying 2.75 as a TD, time value. If this stock did not cross 190 on upside, okay, this will become 0. So call seller will make this much profit if it closed below 190. In the same way, if it closed above 170, okay, here you can see the premium is 1 rupee. So put writer will make profit if it closed above 170. So here put writers are betting that FSL is likely to close above 170. Call writers are betting that it will close below 190. So this is the range which we got from OI, 170 to 190. So it is likely to close above 170. It is likely to close below 190. Okay, any doubt in this you can ask.
Yes. Okay, any questions from anybody till now, or we are clear on this part? Okay, so there are no questions from anybody.
Okay, great. Now, can we see this details in NSE? See, NSE I actually do not use, so I also don't know, how we can use in NSE. So you need to do some, search and find out, how you guys can read this table in NSE.
Okay, so Lakshmikant sir is asking, we sell ATM and buy OTM in bull put spread, right?
Yes.
Okay. Okay, sir. There are no more questions apart from this. Yeah.
Okay, great. Okay, so which strategy we have originally selected? You told me that we will sell 185. Okay, we will buy 180. Okay, we will sell 185, we will buy 180. But I find that will be a bit risky for you. Because if I'm selling 185, okay, this means I'm saying it will close above 185. Right now, you can see FSL closed at 183. You can see on top. Okay, so this will be very risky. We are betting that it is likely to close above 185. But if it did not, then what will be the loss? 2.85, which you guys calculated. That will be the loss. If I show you more, safe strategy. So what you can do, you can sell 170 put option, right? You can sell 170 put option. So that will be very safe strategy, which I'm sharing with you. Now, you only tell me what are the chances where you can see higher chances. Will it close above 185 having higher chances, or will it close above 170 is having higher chances? In which strike price you can see we have a higher probability, right? Above 170 is having higher probability. So instead of 185, okay, you can sell 170. Okay, you can sell 170. You can also sell naked option. Okay, you can also sell naked option. So let's check what is the margin requirement if we are going for naked position. Even if you got 1 rupee, okay, that will turn 2,600 rupees, and you need to hold position for 4 days, for 4 trading sessions. Okay, let's say we are selling FSL 170 put. Now here you can see the margin requirement is 1,09,000. Okay, if you have this much capital, what you can do, you can sell 170 put. Let's say if you are getting 1 rupee premium, then you can keep stop loss. Okay, if you are going for naked position, okay, you are not doing hedging, you are going for naked position, you can keep stop loss. Now what should be your stop loss? Your stop loss should be 2 times of net premium. So let's say if you got 1 rupee by selling 170 put option, you can keep a stop loss of 2 rupees. Okay, 2 times of net premium which you have collected, that can be your stop loss. Or else, what you can do, you can hedge with by buying any other strike. So here I can see 160 strike is having a premium of 0.25. So here what I will do, I will hedge this position by buying 160 put option. So margin, I will also get margin benefit in this way. So if you do not have this much capital, 1,09,000, take margin benefit. Let's say what if we are buying 160 put option? See, now how much is the margin requirement? 40,000 is the margin requirement. Okay, let's move to option chain table. See, so here what we are doing, we will get 1 rupee and we have to pay 0.25. So 0.75 you will get. Okay, 0.75 into 2,600. You can do the calculation. Okay, this much can be your profit if FSL closed above 170 on expiry. Okay, you can do the calculation. 2,600 into 0.75. Okay, this much can be your maximum profit. Right, 1,950 can be our maximum profit. Why we change the strike price? Because we are trying to check if we can take very safe trade. If you sell 185 and buy 180, then very high risk is involved, because right now the closing price is 183 and we are betting that it will cross 185. But what if it did not cross 185? So we change the strike price. If you want to have a more safe trade, you can also go for 165 strike price. So the far you will go, lesser premium you will get, but very higher probability that you will make profit. Though the profit will be limited, but probability of making higher profit will be very high. So you can also sell 165 naked option, sell 165. Okay, stock price has to fall 20 rupees. Right now you can see it is 183 and you are selling 165 put. So very less chances that stock will fall almost 18 to 20 rupees in just 4 trading sessions. Very lesser chance. Okay, so you can also sell 165. So 2,600 into 0.45. Now on Monday when market will open, okay, you will not get these premiums. So you need to check at that time what are the premiums. Okay, if there is a major change in premium, you can change 1 or 2 strike and accordingly you can sell. Yes, so longer out the money option is more safer. Correct. Right, so if you are selling 165 put, this means I'm betting that FSL is likely to close above 165 and I will get 0.45 into 2600. 1170 will be the profit. Though profit is limited, but probability of making this profit is very high. Stock has to come down by 18 rupees in 4 trading sessions, which is unlikely. It can happen, but probability is very less. So instead of guys designing 185 and 180, I will advise you can go for 170. You can sell 170 and hedge with 160, or you can sell 165. So if you are doing naked selling, always remember there is overnight risk. Okay, if you do naked selling, there is overnight risk. So tomorrow, let's say if there is a gap down opening, anything wrong happen, then it will be difficult for you to exit. So as of now, just remember, if you are going for naked writing, your stop loss will be 2 times of premium received. So let's say by selling 165 put, you got 0.45. Then what will be your stop loss? Your stop loss will be 0.90. Okay, 0.90. So either this will hit your stop loss or it will become 0. So risk to reward ratio will be 1:1. Either you will lose 45 paisa or you will gain 45 paisa. Okay, either you will lose 45 paisa or you will gain 45 paisa. The probability of making 45 paisa is looking very high to me as of now. If condition applied, if nothing wrong happened, so very high chances this 165 strike premium will go to 0. Yes, Nagraj sir, if you have confident, probability is very high, you can also increase the lot size. But I will advise you, you are learning first time, you are doing this first time, so always practice with 1 lot. Okay, do not take more risk. First practice with 1 lot for 2 to 3 months. Once you see the result, once you gain more confidence, then you can increase the lot size. Okay, so more safe trade you want, you can go for 165. 170 also you can take it. If you want more safe trade, go for 165. Okay, I hope this is clear. Any doubt, any query you can ask. So what we need to do, we need to check which stocks are coming inside long build-up. Okay, which stocks are coming inside short build-up. Once you got stocks, what you can do the graph analysis. Okay, do the graph analysis and try to confirm why the stock is in long build-up. So for example, FSL we have seen it was in long build-up and the reason was resistance breakout. So these triggers you need to look for when you are doing graph analysis. If any stock is coming under short build-up, then again you need to check if there is a support breakdown or anything has happened. So all these triggers you need to look for. And then you need to do option chain analysis and try to find out where major call writing, major put writing is going on. If stock is inside long build-up, try to check where major put writing is going on. If stock is inside short build-up, okay, you can check where major call writing is going on. Okay, now I will show you some real life examples. Just a minute. So for stock analysis, as I told you, when you have to do this after 2 weeks. Okay, after 2 weeks you can do this. And you can easily make up to 2% return. Okay, up to 2% return you can easily make by doing this.
Okay, also I would like to confirm till this point, is there any confusion or any doubt that you have? To all the participants, I am asking, is there any doubt or query that you have, or is it clear to everybody? Great. Okay. Vicky sir says it's clear. What about the other participants? Great. Hiren sir says it's clear. Okay. What about Sushma ma'am? What about Lakshmi Narayan sir? Nikhil sir? Prabha ma'am? Is it clear to all of you? Great, great. Okay. Okay, sir. Thank you.
Okay. So I will show you now, guys, few examples. Okay, these are the current month examples which I have taken. So here is the position you can see. Okay, so these are the live trades going on as of now. So we will try to check, rationale behind, every trade which I have taken here. So let me show you some examples how I do the analysis in live market. Okay, so this is called earning time decay. So what I do basically, I prefer to sell far out the money options. Okay, naked options. I generally sell naked option, but far out the money. So I'm looking for 2 to 3% return, not more than that. Even if I'm getting 1.5 to 2, I'm happy. I sell the option. Probability of making profit is very high in these trades. Now here is the one slide in front of you guys. You need to identify chart pattern in Shriram Transport Finance. Okay, can you please identify which pattern you can see? Chart pattern, double top, double bottom, head and shoulder, inverse head and shoulder. Can you see any pattern? Guys, do you have knowledge of patterns? Okay, this is called as price action. Okay, this is not inverse head and shoulder. Okay, this is bearish head and shoulder. Yeah, so this is bearish head and shoulder, not inverse. Okay, this is bearish head and shoulder. Now, what is the neckline or what is the support line in this? Can you please identify what is the support line in this? Support level, which you can see. I hope everyone can see 1130, somewhere close to. You can check once again, Lakshmi answer. First time your answer is always incorrect. So you can check once again. 1375, perfect. 1375. So we have a support level somewhere close to 1375. Okay, so let me open the graph now. Okay, so this part is very important. So this is how you have to do analysis in live market. Here you can see this was the head and shoulder pattern. And where we got breakdown, can you see we got breakdown on 15th December. So we have a graph till here, okay, in PPT, till 14th December. And 1375 is around neckline, support level. And finally, we got breakdown on 15th December. Okay, so this is the scene. Let's move to PPT. So this is head and shoulder pattern. Now, another important point which I want to notice is, can you see this big bearish candle? What it indicates? It indicates heavy selling. Okay, price is completely below 50 moving average. You can see price is below 20 moving average. Price is below 50 moving average. And this is big bearish candle. Plus you have a head and shoulder pattern. So all these are, bearish triggers, negative sentiments. So let's see what happened. We got breakdown on 15th December. Okay, here you can see we got breakdown. So here is the trade which I've taken. I sold 1600 call option. Now, can you see 1600 is very far because the support level which you told me it was 1375. Now just calculate the distance. Okay, just calculate the distance. How far I've sold the option. Okay, calculate the distance. 1600 minus 1375. Okay, do this calculation. 1600 minus 1375. 325 points, 225 points, right? 225 divided by 1375. 1600 minus 1375. So it is 225 points. Now divide this 225 points with current market price. Let's say 1375. Okay, divide 225 with current market price. Let's say 1375. So 16%. At 16% distance, I've sold this contract. Okay, when I've sold this contract, I sold on this day. When this breakdown happened. Okay, when this breakdown happened, 15th December. Right, let me check once again. I guess this was the date, 15th. Okay, here you can check the date. Yeah, it is 15th December. So how many trading sessions are left? Let's count. Okay, number of trading sessions are very important. Okay, you have to ignore weekends. Okay, so 15th December, I have sold on this day. So 1, 2. And then we have how many trading sessions? 5. And then we have 9, 4 trading sessions more. So total 11 trading sessions left now. Okay, I sold on 15, 2 trading sessions for this week. Next week, 5 trading sessions. Okay, till Friday. And then we have an expiry on 30th. So these are the 4 trading sessions. So total 11 trading sessions are left. So what we are betting? We are betting that Shriram Transport Finance will not cross 1600. Can you see how much premium I got from this? 4.15. You can check. So how much will be the profit? 1,600 will be the profit. Okay, 1,600 rupees will be the profit if Shriram Transport did not cross 1600 on upside. Okay, I sold on this day when price was how much? You can see it was 1357. Okay, I sold 1600. So though the profit is very limited, but very high chances. Okay, you will make this kind of profit. Now let me take you to the option chain. Next step is you need to check where major call writing, where major put writing is going on. Okay, let's check Shriram Transport Finance. Okay, this breakdown happened on 15th December. So on 15th December, you can see. Okay, this is the 15th December OI data. The stock is weak stock, so you need to focus on call side. Can you tell me in which strike price major call writing was going on? In which strike price major call writing is going on? 1500, correct? 1500 highest OI, 2,57,600. But look at the change in OI. Okay, this is very important. This will tell you where fresh writing is going on. Okay, now look at the change in OI and tell me where fresh put writing was going on. 1400. Okay, these are the aggressive traders who are selling 1400 strike. Look at the premium at that time. It was 29 rupees. So these are the very highly aggressive trader. I will say they are betting it will close below 1400. Which strike I have sold? You can see I have sold 1600, very far away from highest OI also. So this is like a wall. Okay, 1500 is a wall for me. And always be behind the wall. Sometimes highest OI strikes challenge. Okay, price again bounce and challenge this highest strike price. So I always prefer to be behind this wall. I have sold 1600, very safe trade. At that time I have taken. So even if you wish, you can also sell 1500, not a problem. You will get 9 rupees. What will be your stop loss? Your stop loss will be 18. So I have sold at 4 rupees. My stop loss is 8 rupees. Now let's check what are the current premiums. Okay, we will see the current premium as of now. So this is the weak stock. So this is how you guys need to make a list of weak stocks and strong stocks. So why we picked Shriram Transport Finance? The reason was very simple. It was head and shoulder pattern. We got breakdown. Price was trading below 20 and 50 moving average. Okay, 1600 strike price. You can see it is trading at 40 paisa. So almost it became zero. From 4 rupees, now you can see it is trading at 0.40. Okay, 1500. It was trading at 900. Can you see this is also has become zero. 1400. Aggressive writers were selling at that time 1400. Okay, here you can see it is now become 1 rupee. It was 29 at that time. Now it has become 1 rupee. So this is what I'm sharing with you, how you can sell naked option. So always keep a distance of 20%, I will say, for you. Always sell far out the money option with a distance of 20%, minimum 20% distance you can keep from current market price. Okay, if you are very confident, then you can keep a distance of 15% also, 15 to 20%. Otherwise, try to keep a distance of at least 20%, I will say, from current market price. And that strike price you can sell. See, now here is the one important note for you. Shriram Transport Finance was under short build-up. When it was under short build-up? On 14th December. Okay, 14th December means on this day. Because here you can see we got big bearish candle, which clearly indicates that sellers are active. And coincidentally, it was under short build-up. So now here you can see the short build-up. This is 14th December data. Okay, I've taken this screenshot for you. In live market, 14th December, at the bottom you can see 11:12. Okay, at around 11:10. Can you see Shriram Transport Finance? We have a short build-up of 7.92%. Bank Nifty was also inside short build-up. Kotak Bank was highest OI, 11, more than 11%. And OI gainers, you can see it was Kotak Bank. So this is how you can cross-check all this data. So it was a weak stock, head and shoulder pattern, plus it was inside short build-up, and we got the opportunity to make limited profit in this counter. Okay, so this is Shriram Transport Finance. This is the option chain I've already shown you. Now see, next is SBI card. Okay, so support breakdown we got on 14th December. Okay, here you can see we got this support breakdown. Okay, 920 was support. Okay, we got this support breakdown. Okay, on which date you can see on 14th December we got support breakdown. So what we will do, we will open the option chain, and where we will see where major call writing, put writing going on. Okay, this is SBI card. Okay, we got support breakdown. Now read the OI table, guys, where you can see a fresh call writing, because support breakdown is a sell signal. Okay, Lakshmi Narayan, we will not see Kotak Bank, because as I told you, we need to confirm from graph analysis. We want some trigger. So why we took Shriram Transport Finance and not Kotak Bank? Because there was a short trigger in Shriram Transport Finance because of head and shoulder pattern. And why I have again taken SBI card, because there was a support breakdown. So all these price action is very important. Just because stock is inside long build up and short build up, we will not trade. Okay, we need to confirm by doing graph analysis. Why we took FSN? Because we got resistance breakout. Okay, just because it is inside long build up and short build up, do not trade. We want other confirmations also. Okay, 1000. Now again, can you tell me why writers are selling 1000 call option? What's so special about 1000? Why not 980, 960, 1090? What's so special about 1000? Right? Psychological number, round off number, easy to remember, 1000. See, price was trading below 900, and here you can see the writers were selling 1000 call, 14,48,000. And can you see fresh put call writing? Fresh call writing was going on 920 strike. These are the aggressive writers which came at 920. They are betting stock will close below 920. In 1000 strike price also, can you see we fresh call writing happened? Fresh call writing happened in 1000 strike also, 88,000. This was the fresh writing on the day of breakdown. Okay, on the day of breakdown. So this was the good support level which was taken out. You can see since month of May, this support level was not, price was not breaking this support level. You can see since month of May, it was trading completely sideways. 920 support, 1160 was resistance. See, this was sideways, and this breakdown happened. So if you wish on that day, what you could have done? You could have sold 1000 call, but that will be a bit risky, I will say, not very high risk, but still small risk is involved over there. That's why I told you can keep distance of minimum, I will say minimum 20%. So instead of 1000, what you could have done, you could have sold 1100. If not 1000, you could have sold 1100. Okay, just a minute. See, 1100 was trading at 1.85. Now lot size is 500 for SBI. Lot size is 500. So just do the calculation: 1.85 into 500. This much you can make. Okay, if you are selling 1100 call option, this means you are betting price is likely to close below 1100. Now, when we are selling this option, see, we are selling this option on this day, on 14th December, right? So how many trading sessions are left? You can check, cross check this. We are selling on 14th. So 3 trading sessions for this week, 5 for next week, 8 and 4 for next week, 12. You need to hold for 12 trading sessions. Okay, what was the price? 902. And we sold 1100 strike price. Now you only tell me, is this very high risk involved in this trade? Price is trading at 902 and you are selling 1100 strike price. Right? Very safe trade. If you want to take a little bit high risk, go for 1000 strike. Okay, go for 1000 strike. Now also we will apply moving average, and we will cross check what was moving average showing to us. See, this is 20 moving average, this is 50 moving average. Okay, you can see dead crossover. Can you see dead crossover? Price came down till support, bounced. Where it got rejection? It got rejection from 20 moving average. Look at this big fall on this day. How much? 6% fall you can see on this day. You can read the number from bracket from top. On this day, stock was down by 6%. Okay, so this one big bearish candle clearly indicates heavy selling is going on in this stock. Next day, you can see another 3.5% fall. So almost 10% fall we already got in this counter in 2 days, which clearly indicates heavy selling is started in this counter. So on this day also, I've sold the option. Let me show you. Before breakdown also, I managed to sell option 1100. So here you can see SBI card. I managed to get 2.5 on that day. Okay, so what I did, so this was the very simple analysis. Okay, I found that dead crossover, we got big rejection, and stock was inside short built up. Stock was inside short built up on both days, on this day also, on this day also. So I sold 1100. What was why 1100? You can see because almost 1100 was the top for this counter. Actually, it was 1143, but option was not liquid. 1150, 1100 option was liquid. So here you can see we managed to get 2.5. Okay, lot size you can check, it is 500. And margin blocked or margin used is 40,000. Okay, why very less margin? Some stocks have very less margin because by nature these stocks are not very highly volatile. So for those stocks, margin is very less, and I'm selling far OTM strike. Price is trading at 902 and we are selling 1100. So this is like 16 to 18% distance from current market price. The more far out the money you will go, lesser margin you have to pay. So if you are very much confident, you can increase the number of lots. Okay, but initially you can keep it 1. Slowly and gradually you can sell 2 lots, 3 lots. If you are selling naked option, make sure your stop loss will be 2 times of what you have received. 2.50 you have received, you can keep stop loss 5 rupees. Okay, 5 rupees you can keep stop loss. Okay, Lakshmikant, this is what I explained. If you are selling naked option, but that option is far OTM, okay, far out the money, then margin requirement will be very less. Okay, you can cross check this. If you are selling ATM option, then margin requirement will be very high. Okay, let me show you. Okay, far out the money option will have lesser margin. So SBI card, you can see on top it is 907. So let's say I'm selling 910 strike. Okay, SBI card 910. 910 will be ATM, but 910 is not available. So let's sell 900. Okay, let's sell 900 and see the margin. See how much margin is asking? 88,000 margin is asking. Okay, this is ATM. Now, if I'm selling OTM, okay, far OTM, 1100. Okay, if I'm selling far OTM, you can see margin will be lesser. Okay, 38,000. 38,000 is the margin. Because this is far OTM, probability of going till 1100 is very negligible as of now. So margin requirement will be very less. At that time, it was somewhere close to 40. So there is no major difference right now. Also, you can see it is 38. So this was the weak stock. This is how you need to pick. You need to prepare a list. Okay, which stock is a strong stock, which stock is a weak stock. So this will help you. Okay, this tool will help you. Long built up, short built up. Okay, this will help you. All these stocks I've picked from the long built up or from short built up. Okay, so market is completely bearish. So you can see the portfolio. I have only sold call option. There is no put option. In every stock, I've sold call option. Okay, so here we have seen 14 December SBI card. Okay, we sold 1100 call. So in one more account, I sold 1100 at 1.65. Okay, in this portfolio, you can see we have sold at 2.50. Why so? Because we sold on this day. Let me show you. Okay, on this day when stock was trading very close to 920. So we got very high premium. On the day of breakdown, you can see how much premium we got. We got 1.65. Okay, 1.65. See now, Bajaj Finance was showing inside short built up. Okay, here you can see Bajaj Finance. If you can see here, this is Bajaj Finance. Okay, it was an inside short built up. Now, do you recognize the sign of weakness in this counter? If yes, then kindly mention why you feel this counter is a weak stock. Okay, this is the graph of Bajaj Finance on the day when it was inside short built up. Is this counter having sign of weakness? If yes, then how you can spot, on what basis you can spot sign of weakness?
Okay, Lakshmikant sir says it's gap down.
No, not because of gap down.
Okay, trend line, downtrend, bearish
Okay,
trend in big candles.
Yeah, you can focus on tops. Okay, lower tops. This is downside. It is going down. Plus, look at the moving average. Here, what you can see. Can you see dead crossover? Dead crossover price went down, went up. See, it did not respect moving average. Here you can see we have an angle fin pattern, bearish angle fin, and then it is going down. Okay, head and shoulder pattern. Yes, here we can say this was the head and shoulder, but not that proper, the one which we have seen in Shriram Transport Finance. So this is not a proper head and shoulder as of now. Okay, so it is below moving average, and you can see we have a 3 big bearish candles. which clearly indicates selling is going on, and stock was inside short built up. Okay, so let's look at the option chain when it was inside short built up. So 7,500. Okay, you could have sold 7,500. Okay, 4,49,875 shares were active at that time. Okay, how much premium you could have managed to get? 36 rupees. If you want more safe trade, okay, instead of 7,500, you can go for 7,600. You can go for 7,700. The more far you will go, the very high probability it will give you the profit. Why we have highest OI in 7,500? Because this is round of number again, 7,500. That's why you can see we have a highest OI. Okay, fresh writing, you can see it was going on 7,000. Now this is also a round of number. So therefore you can see we have a fresh call writing going on in this strike price. Premium was 144 at that time. So pick the stock from scanner and do the graph analysis and sell far OTM. Okay, so remember 20% distance you have to keep at least. And another stock which you can see in portfolio is Tata Chemicals, right? You can see here Tata Chemicals. So let's see why we have sold Tata Chemicals. Okay, this is Tata Chemicals. Now tell me, is it looking like a weak? If yes, then on what basis? Okay, on what basis you can see this is a weak stock? Okay, debt crossover, RSI, no, both are not correct answers. So look at the graph once again properly. Okay, you have a good data in front of you. So just observe the graph, properly and tell me why this counter is looking weak to you. Okay, debt crossover is not correct option. Okay, not correct answer, debt crossover. You can clearly see the gap. Okay, here you can see the gap. So on this day, what happened? Full gap down, and since then, can you see this full gap down is working like resistance? Okay, this full gap down is working like resistance. So stock is not able to cross 960. Okay, 960 level, stock is not able to cross. Okay, so here you can see what we have done. We have sold 1,100 call option, 1,100 call. Lot size 1,000, 1.6 premium we got. So this is like 1,600 rupees. Okay, what will be the stop loss? 3.2 will be your stop loss. Okay, now you can see since October it is not crossing 960. So therefore we are selling 1,100. See, if you wish to take risk, you can go for 1,000 because 960 is resistance, right? Let me open the graph. 960 is resistance, 955, 960 is resistance. If you wish to take risk, you can sell 1,000 also. But I want very safe trade, so 1,100. Look at the top till date. This counter has made 1158. So close to that, I have sold 1,100. And decent premium you can make, 1,600 rupees you can make. Then Vicky sir, we have stop loss, right? If anything wrong happen, okay, we have a stop loss in place. If stock fill the gap, stop loss. Okay, 3.2 double will be your stop loss.
Okay. So any questions related to this specific topic?
Vicky sir, this is not a myth.
Yeah.
Okay, it is possible, stock can fill the gap. But here you can see we have a reference point. Okay, this point I've already explained in previous bootcamp also. We have a reference point. After gap down, see, one time it rejected, two time it rejected, and third time it also happens same. So when you have more reference points, so you can be confident and sell. Okay, so I hope this is clear how you are going to sell naked option. So what you need to do, again, you can note down these steps. for stocks, you will not trade in options. Okay, you will not sell naked options in stocks for first 2 weeks. Okay, for first 2 weeks. So you need to open the calendar. Okay, let's see when we have a January expiry. So when is the last Thursday of January? I can see it is on 27th. Okay, so this is the calendar starting from 1st January. Okay, so leave at least 2 weeks, I will say. Maybe you can start uh, as 27th, we have an expiry. So we want 10 to 12 trading sessions. Okay, we do not want to hold our position for more than 10 to 12 trading sessions. So 27th, we have expiry. Then maybe you can plan to sell option after 10th. First 2 weeks, you don't have to do anything because premiums will be very high and you will not get, time decay benefit. So from 10th onwards, 10th January or after 10th January, you can start planning. You can start watching this option chain, long built up, short built up, and then cross check. If stock is inside short built, long built up, then what is the reason? For FSL, remember this example, FSL, we have a resistance breakout, and we can clearly see buying is going on in FSL since last 2 days. If stock is inside short built up, try to find out the reason why stock is inside short built up. So there could have been some pattern formation, double top, head and shoulder, support breakdown. Okay, downtrend, rejection from moving average. All these points you need to check and keep 20% distance from current market price and sell naked call option. So in this way, you can easily manage to make 2% return on capital. Okay, that is limited, but consistently you can get for all 12 months of year. So on an average, you can make, even if you make 18 to 20% return on capital in 1 year, that is very decent return.
Okay.
See, right now, Nagaraj sir, market is a bearish side. So I do not have, show you the examples of on put option. So maybe in the month of January, if there is a change in market, what I will do, I will make one video and I will post in the group. And then you can check at that time.
Okay. So any more questions apart from this? Okay, sir. So we can move. Yeah.
Yeah, I'm done with session.
Okay.
So guys, if you have any doubts, any queries till now, you can ask.
Okay. I have two announcements to make. First, like before you are asking any questions, before everybody leaves, So I have shared the feedback form link in the chat box. I request everybody to fill the feedback form so that I know that what is the feedback for today's class. And second is that we won't be having a class tomorrow because as you all know that we have the super alpha trading batch, starting tomorrow at 11 from 11 a.m. till 6 p.m. So there would be no class tomorrow. We'll be conducting tomorrow's class day after. So I hope everybody is okay with it and there's no confusion. We won't be having any classes tomorrow. Yeah. Great, great. Okay. Fine, great. Okay, sir. We can take up the questions. Now, you can raise your hands and then I'll allow you to unmute yourself and ask your questions if you have any. Okay, Lakshmi Kant, sir. You can unmute yourself and ask your question.
So very, very good evening to you, sir.
Yeah, good evening.
Actually, when we see bearish view and we'll go far OTM and we'll sell CE, right, sir?
Right, correct.
Yeah. And when, opposite vice versa, probably right. When we see bullish view, we will be selling far OTM, ITM, right, sir?
Yes, OTM. Yeah.
Put option for far OTM.
Right.
Yes, sir. Sir, and sir, day before yesterday, also Friday, I used to have this doubt in my mind. I would like to clarify it. So actually, we have the gap up failed and gap up and gap down strategies.
Okay.
So in that gap up failed especially, and last week completely I have observed.
Okay.
And in that some stocks will not trigger the price. If at
Okay.
all they trigger, they won't reach the target. I mean, at least 50% of the target they won't reach, and again they will go up and sideways. So
Okay.
whichever stock I pick, especially this trend has been reversing. I don't know why, but what happened on Friday? I have selected PVR, and PVR in I don't want to take risk, and I have did in equity, not in options.
Okay.
Direct cash and carry in intraday.
Okay.
It has given good, I mean, move.
Okay.
But I was completely confused how to select if we get 5 stocks in it. How to
Okay.
select which stock we should select. I mean, according to the some like percentage is showing in that gap up, sir. I think 2 lakh, 3 lakh OI, I think.
No, we don't have to look at the OI for this gap up failed technique.
Okay.
So you can just check the previous day action, what previous day action is saying. So let me tell you, why PVR worked very well on Friday. So can you identify the support from previous trading session? At what level you can see the stock has taken good support in previous trading session?
Uh,
So if you observe the graph carefully, can I say this was the good support on previous trading session?
yes, sir. Yes.
Okay, this was the very good support. And
Yes.
look at the low of first candle. It is below this support.
Below.
And our trade triggered below this low only.
Alert candle.
Yeah,
Yes.
that's why it worked very well, because previous day support is taken out. If previous day support is taken out, then very high chances at least it will go till previous day low, because the room is completely open for this counter to trade below now or go till previous day low. So this one price action you can notice. If you are
Only
getting this
previous
type
day,
of price action in any stock, you can select that stock and go for trade.
only previous day, sir, and a couple of days we need to see.
Previous day it's okay, you can see it was good consolidation. It has formed a good base at this level, 1348.
So
And
shall we
that,
take?
yeah, tell me.
Yeah, please, sir, please.
Yeah, so I was saying that support or that base is taken out in third candle itself, so that's why it worked very well.
Yeah, and sir, can we take an example of Hero Motoko? I mean, it hit my stop. I mean, I just exited.
Okay.
Because it is no movement at all.
Now
And
you can clearly see. Okay, this was previous day action. Can I say this was resistance on previous day?
yes, sir. This was this.
Where was the base in previous day? If I tell you, the stock was completely sideways. Okay, inside this range on previous day. Okay,
yes.
This was the range. See, so it came down. It took support, and again it bounced. So you can avoid. With experience, you will learn all this. So previous day action is very important.
Okay.
Previous day, swing high, swing low, you can note down.
Okay, high and low, sir.
Swing high, swing low. So PVR was very simple case. It is just sideways. It moves sideways.
Yes. Sir.
And this Hero Motors, this was sideways for previous day.
And Sinjan and Alchem also didn't. Bajaj, Finserv.
These are quite big stock. You can completely avoid Bajaj Finserv. So do trade in counters. Like 1,000 rupees, 2,000 rupees. It's okay. Anything more than that, you can avoid.
Yeah. Okay, sir. Sinjan, sir. Can you see Sinjan?
Can you spell, please?
SYNGENE. SYNGENE.
Okay.
Yes.
But this was not as per the gap up failed. See,
Yes.
It opened below previous day low.
True.
This is not the as per the.
It has come in that scanner, sir. Actually,
it has came inside a scanner. Maybe
yes,
I don't know. It is not as per the setup, right? So you can ignore if it is showing inside a scanner. You cannot confirm on iCharts. You can ignore the stock.
Okay, sir. Thank you so much, sir. Thank you so much.
Okay, sir. Do we have any more questions? Okay. Any more questions from anybody? Okay, sir. I don't see any questions from anybody now.
Okay. Lakshmi Narayan, I hope your doubt is clear. Right? We have taken Hero Motors.
Yes, right.
Yeah. Okay.
Okay, sir. Then we'll be meeting day after tomorrow.
Day after tomorrow. Okay.
Yes.
Okay.
Okay.
Thank you.
Yes. Also, tomorrow, as I have told you, there would be no class, and I'll be sharing the feedback form link again. I would request everybody to please fill the feedback form so that we know what is, your feedback for us. Merry Christmas to everybody. Thank you for being here. Thank you, sir.
Thank you. And Lakshmikant, see, gap up, gap down, 70, more than 70% chance it will work. So do not look for swing high and swing low. It only required for gap up field.
Okay. Great.
Thank you.
Okay. Thank you. Thank you, everybody. Thank you, sir. Okay. Good night. Bye-bye.